Morning and welcome, Patriot Radio News Hour. Joe and Jason on this Monday. I hope you had a fantastic weekend. I did. I got out, played a little golf, watched a little golf, the PGA. Wasn't a very hard course, but it was exciting. Came down to the last shot. Was it Schauffele ends up winning the PGA? I was hoping for the live guy. DeChambeau was right there. They were tied, and I kind of like the guys that nobody else likes because, well, there's a reason. At least anyway, I think it is maybe they're a little jealous. I don't know. Our toll-free number, 800-951-0592. The website at allamericangold.com. And, people are probably a little jealous of a lot of our listeners because they've been buying gold and silver for a long time. And, Jason, all of these things that, we've been warning about, whether it's debt, whether it's idiotic policies, a lot of the time we talk about why don't they want true price discovery, right? How bad are our financial institutions? I mean, really, how bad are they really? And it seems like all of this is starting to play out right in everybody's living room now, as people are openly questioning, hey, how much longer can the United States go with the deficit spending? Is it the end of the superpower reign of the United States, right? The dollar as the world's reserve currency. And, we had an assassination attempt last week, right? A president that was close to Russia. And then last night, a helicopter crash in Iran. The president of Iran is dead now. Don't know, right? They're not saying anything other than it crashed in fog in the mountains in bad weather. But, Jason, are we once again getting closer and closer to, World War III? Because that seems like the path that all of a sudden we're on.
I don't know. We'll see, right, John? What is World War III? what does that actually mean? And when it comes to the financiers of the world, aren't these guys over in the Middle East, the ones that are, the Saudi Arabians, are they linked into the same guys as the Russians, as the Bank of England and the Federal Reserve? Aren't they all kind of just the same? Aren't they all kind of moving in the same direction? They talk about BRICS, how BRICS is going to challenge the system. Well, the system is dying. This doesn't look like a fight, Joe. This looks like a change. Isn't that what it looks like to you? It looks like everything's changing. They can call it a fight. That way people can take sides, and they stop looking at what's actually being done, and they just look at who the enemy is. And this is what it's done. This is why people don't buy gold and silver, Joe. They're told not to buy gold and silver because you need to be American. You need to buy bonds. You need to buy the stock market. You need to have a 401k. And as the economic things change year by year, decade by decade, people get lost in the story on the TV. And that's why it's really cool with gold. It's got this long history of weathering all this geopolitical and economic nonsense. It's always there. It's always there. It's always boring. It never really gets super exciting. It's not the newsworthy thing that's on the headlines, but it's always there, isn't it, Joe? It's always there, and it's always performing against whatever economic mind games are going on in the world.
Yeah, and now we're seeing, the start of the true value of real money. And when we look at the system that's been created, it's a debt money system. That's what they wanted, right? This is what the founding fathers, all the way back in the 1700s. How could these guys have known this? Why would they have warned, hey, you can't let the bankers get in charge of the money? Well, most people don't really, because they don't teach it in the history books. right? The Boston Tea Party, it was about tea and taxation without representation. It was really about fiat money. See, people don't know that. See, they told the settlers, they told them, hey, we don't want gold and silver anymore. We want this script money, this paper money. You need to trade your gold and silver for this paper money. And then, of course, what did they do? Well, we don't want that paper money anymore because people are like, it was everywhere. Right? Oh, no, it's not worth anything anymore. We want to go back to gold and silver. I mean, essentially, that's what they knew. See, all fiat money always goes to zero. Why? Well, because they don't want to follow their own rules. Right? See, they had these rules. How about 2% inflation? Well, that's great. Right up until it doesn't, well, it's okay. It's a little higher, it's double, triple, but it'll get there eventually. It'll go back. How about interest rates at zero for 15 years? What kind of economic policy is that? Stupidity is what it is, right? We can control the economy by lowering and raising interest rates. No, you can't. See, you can for a little while. You can when the debt money system is manageable. But Jason, quite simply put, we've gotten to the point like all fiat money. Man, you just printed way too much of it, and now they really don't have any control over the economic policy. Of course, they'll try to convince you otherwise, but we know the real story, and gold and silver are showing it, and showing it again today. We'll be back right after the break. 800-951-0592. Joe and Jason, Patriot Radio News Hour on this Monday. A quick look in at the markets. The Dow's up 50. The S&P's up 18. The Nasdaq's up 97. The 10-year note already back to 4.45. So Thursday it was 4.3. Now back to 4.45. It's going to be hard to see yields falling with the debt avalanche that is coming. Crude oil unchanged right now. Gold's up a dozen, 24.30. Silver's up $1 right now, $32 on silver. And Jason and I, we warned you on Friday. Very good chance that we could see $2,500 gold this week. And it's kind of seemed ridiculous, didn't it, Jason? $35 silver? $35 silver? Come on. Right? Well, of course, you got to remember, at the time, silver was above 30, but silver actually rallied another dollar after we got off the air on Friday. Now it's up another dollar. Silver's up $3 and not even 2 full trading days. And there's a lot of room to run. And again, it's a warning. You guys need to decide. What are you going to do? You know it's a bubble. We know the debt markets are a bubble. You know it. Don't stick your head in the sand. But Joe, the Dow's 40,000. Maybe I can get a little more juice out of it. You can try. Maybe. But what is not only the prices telling you, what are the other countries of the world telling you? What are the billionaires of the banking industry telling you? See, because they want to be able to say, well, I warned you. Right? Jamie Dimon, I warned you. Right? Bank of America, hey, I warned you. Goldman Sachs, I warned you. Right? And the list just goes on and on and on. You need to get diversified. If you haven't bought gold and silver yet, you've been listening, what are you doing? Right? Now I'm telling all of you, hey, that's not going to be enough. You need to be even more diversified. Right? Take some of that IRA that you've built up or some money that you built up. If you got $50,000 or more, you need to at least check out why refi. Why? Because you can get up to 10.25% fixed rate of return. You are not going to get 10.25 over the next 5 years on Wall Street. It's just not going to happen. Especially when this bubble bursts. It's just not going to happen. It's a fixed rate of return. It's not correlated to Wall Street. It doesn't care who the president is. It doesn't care about central bankers either. Get more diverse. You better be more diversified than you were during the financial crisis. I mean, come on, we learned. Didn't we learn at the .com? Didn't we learn at the financial crisis? This is what you need to do. Now it's up to you to get it done. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YREFI-24. Now, having said that, what the heck is going on with gold and silver? I mean, how can this be? Look at this rip your face off rally that's been going on all year, the year of chaos. Jason and I remember, go back to January, listen to the tapes, listen to the podcast. We were telling you, better get ready for March. Better get ready. Right? And then, bam, it takes off. And then we thought it was June. We missed it, Jason. We missed it. It was May. It was May. But the paper guys can't control it. I mean, believe it or not, here's what you need to believe. That the ETF, a.k.a. paper gold, nobody's buying it. Right? That's what they're saying. They're not buying paper gold. You're right. Guess what? That should scare the hell out of all of us. See, because why do they buy paper gold? Well, I think the bubble's here, but I'm going to buy paper gold, but it's going to be okay. Right? It's going to be okay 6 months, a year, 2 years from now. It'll be okay. I'll just buy the paper stuff. And then once it's better again, I'll sell it, and then I'll go back to doing what I'm doing. That's not what's happening. What is everybody doing? They're buying the physical stuff. UBS, which, by the way, UBS, they are the main, well, I don't know about the main, but one of the main, I'll say the main Western bank. How's that? In the Shanghai Gold Exchange. In late April, they sent their entire precious metals team to China because they wanted to find out what is going on here. Of course, the report from UBS says that it is, obviously the leading supplier of physical gold to China. And they're saying that the largest consuming and producing nation of gold on earth, they said about 3,500 metric tons of gold is dug out of the ground. They're like, that's it. Right? That's right now, believe me, everybody out there is trying to go as fast as they can when it comes to digging gold out of the ground. And, of course, China consumes a third of that just by themselves. On top of, they are producing now, they're down to about 350 metric tons. You know what's funny? 10 years ago, they were at almost 450. This kind of tells you this mine supply. Of that, they don't export any of it. So when you really think about it, really, we've got about 3,150 metric tons, and China drops that number to below 2,000 metric tons. And then, of course, if you sit there and throw India in there, there's not even 1,000 tons of gold to go around for everybody else. And, of course, that goes with, right, you got to think about it. There's gold in all the cell phones. There's gold in all the laptops. I mean, there is some industrial use for gold besides just the physical. But, Jason, what UBS is finding out is there's really no alternative to gold. Not Bitcoin, not fiat money, not treasury bonds. And when they look at sentiment, investor sentiment in the West, they feel like it is completely out of touch now with the sentiment from the people that actually control the gold markets, which is not the Western bank. So, Jason, a pretty interesting picture from UBS saying, hey, listen, this is easy math. This is easy math. As far as what they look at when gold and silver prices, they're almost simply saying there's nowhere for this price to go but higher, because this is a supply and demand problem. This is a physical metal problem. This is not a paper problem.
Right, and that's what's going on with all the commodities. There's this thing called inflation, and it causes more fiat dollars, no matter what currency you're using, to buy these items, which are in a certain amount. You know, I mean, Joe, they found all kinds of really good sources to mine gold and silver, that would bring the price down if somebody actually wanted to mine it. And as you've said many times, even if they find these spots, which are becoming more and more rare, to mine these metals, they're not producing very much, right? The supply and demand issue and the fiat currency issue is just driving these prices straight upwards. You know, you can't have a lower price unless you have a nice supply coming in to drive those prices down. You know that the money managers of this world, they don't want gold and silver and copper and lumber and all this other stuff going up, but at the same rate, Joe, we're starting to see that they kind of do want it to go up. There's this whole thing. Why is there about inflating their way out of this economic mess they're in? And what do you do? How do you inflate your way out? Well, you can cause a little false scarcity, cut down a few supply lines, push the prices up, act like you're going to attack inflation when you just sit there and watch it go to 3 or 4% month after month after month. And you try to burn your way out of this problem that they're in, Joe, because as you said in the first segment, you know, there's all this fiat currency everywhere, isn't it? It's all over the place. You know, the United States being the world reserve currency. Well, that's just one piece of it, right, Joe? You just look at all the other currencies. How much yuan is there versus 10 years ago? Look what they've been doing in China. Japan, when did they ever stop printing, right? All these currencies are working together in a little bit. You know, Japan, the yen is not the world reserve currency. It doesn't get traded as much, but it gets traded, right, Joe? If you pile them all together, and I've seen charts, yeah, the dollar might be shrinking in its amount, but the yuan's growing. Every time there's a shrinking fiat currency, there's one growing. And if you look at the supply of fiat currencies, it gets bigger and bigger and bigger and bigger. So commodities, Joe, are going to be where it's at for a while. I think we could be seeing a 10-year, 20-year bull run on not just gold and silver, but just everything. And that just means less and less for you, the average guy, as prices go up, Joe.
Well, and you bring up a good point. You know, let's not forget, from 1981 to 2001, gold was a pariah, right? It was unnecessary. It went from $800 to $250. Right? Remember, the Bank of England said, we're just selling all our gold. Right? And Greenspan was the maestro. And we're going to pay off the debt by 2010. Listen, if Alan Greenspan had been right, then what England did, what the price of gold was, that should have been right. Right? Gosh, if you're going to be in a debt money system and not have debt, right? Right? Well, yeah, then I guess you don't need gold. See, but guess what? That was a lie. It was a fantasy. It was pretend. Right? They even had a couple of pretend budget surpluses. There wasn't surpluses. There wasn't a surplus. Well, again, They took the Social Security money and spent it all, and then called it a surplus. But neither here nor there. It didn't work, did it? Now look at it. Look at where we're at. And Jason's talking about a 20-year cycle. Yeah, these cycles will last a long time. I think we're going to see. I hope it's not 20 years. I really hope it's not. But I think we're going to see a very, very long period where Wall Street is going to be a very difficult place to be. Why? Because it's debt. Because they haven't allowed for price discovery, right? It's inflated. It's bubbled. It's all of those things. And you got to remember, since we closed the gold window in 1971, how can we go from a $400 billion deficit in almost 200 years, of which over half of that was leftover debt from World War II? And when we sit there and look at these things, now we're starting to wonder, okay, what happens when we can't use more debt to fix the debt problem?
Joe, you're going into that break. We're talking about this possible cycle we're going on, and I can always hear the skepticism. There are things that have made some people run from gold. I actually talked to a tow truck driver over the weekend, right? I'm going to bring in there's two things. You're listening to Joe say, hey, 1981 to 2001, gold was kind of being stomped on and laughed at. But there's going to be people out there listening saying, hey, I bought gold or I bought silver. And I remember I bought silver at $35 an ounce. And here it is. It's been, 15 years later, and I'm not making my money back. We're talking about a 20-year cycle. Well, the reason it's kind of easy to see this is what happened with the 0% interest rates and the non-reporting of hey, we have this economic crisis that's going to bankrupt the entire financial world, which is what, you got to put yourself back in 2008 and remember that they thought this was an economic apocalypse. They were talking about the world going backwards. And that's how severe it was. And what did the Fed do? They printed money and gave it to everybody. All their Western economic friends, they all got a cut. Countries and big banks and big businesses, and everyone was floated. I don't think that is an option, Joe. They can print money and try to float some things. They can do that, but I don't think Japan getting $3 trillion is what's going to fix things and keep the gold and silver price down for 15 years. When the tow truck drivers, I told him, look, dude, don't. Yeah, it sucks. It sucks that you bought when it came down. It looked like it was overbought. I used to tell people, well, it was overbought, a little bit in 2011. It just got overbought. No, I think gold and silver were going where they were supposed to go. And one more fat trick was played on this country, especially, but the world, which was, hey, we're just going to throw rates down to nothing. Well, we're going to print and make everyone happy. And try to float this boat. So I think gold and silver in 2011, Joe, I think it was going where it was supposed to be going. That's what I think was happening. I think it got sabotaged. And I think what we're seeing now is that it's with the inflation, we're seeing the 70s and the early 80s, not 81 to 2001. We're going to see a spike in gold and silver. And I don't think the Fed has the ability to just print their way to making it look like gold and silver is just not a big deal. And we're going to keep everyone happy. You're going to buy stocks. You're going to buy treasuries. That's just not the world we live in. So if you bought silver at $35, well, hang on to it. It's coming, And here's the other thing. I was watching a video, Joe. I got to say this. I watch videos. I like to see what other people are saying about gold and silver. And I saw this guy. He's not one of our customers. But he was selling. He came into this shop and he's selling. This is just me, Joe. I don't ever want to hear this right now. Not in this particular situation. Everyone has nobody really wants to sell their gold and silver generally, but you have things you have to pay for. We know, if you want to sell, you call 800-951-0592. We're going to buy. That's what we're not here just to sell it to you. We'll buy it. But this guy, Joe, he came in, he's like, well, I got to sell it. He didn't want to say that he needed money. He was a little too prideful. We're like, well, what are you going to, then why are you selling it? He's like, I think it's kind of it's getting to where it's, it's not going to keep doing this. So I'm going to wait till it goes down and buy it back. That's what he said, Joe. He said, I'm going to wait till it goes down. I'll buy it back. Now, I can't say for sure it's not going to go back down, but you know what, Joe? From what I'm seeing, I think we got a whole lot of up before we have a correction. And is that correction even going to come back to $35, $30, $25? Don't come in and sell gold and silver to me and say, well, I'm selling it because I'm going to wait for it to go down, then I'm going to buy it again. That's not what gold and silver is. That is not how you're supposed to. That is not the right attitude. This is not a stock, right, Joe?
Well, it's funny, and I'm glad you brought it up, because that's what the paper gold's for.
Yeah.
That's exactly what it's for. And shame on anybody who bought silver at $35 and then didn't buy it again when it went back to $12. Right? Shame on you. Why are you buying it? Why are you holding physical metal? It's a hedge. What's it a hedge against? Fiat money. I mean, that's just what it is, right? The debt money system, right? It's a hedge against when things go horribly wrong. And again, I agree with you, Jason, that's not a true buyer of physical metal. You should be making all kinds of money on your investments if you're truly, hey, I got my strategy in place, and I'm always increasing my hedge against the fiat money. The more gold and silver you have set aside, the more gold and silver you're going to have available for you when this thing comes crashing down. You know what I want to hear? Listen, I get it. When you got to sell out of need, you got to sell out of need. Right? That's a fact. We've all been there. Right? You're not alone. We've all been there. Bad times come. We know it. Everybody does. Everybody faces them. But really, the selling I want to hear is the selling as it all comes crashing down. Hey, you know what? I made some great money on my gold. I'm going to sell some gold because I'm going to buy whatever it is. I don't know what it's going to be. Is it going to be housing? Maybe you're going to buy an office building. I don't know. But that's the type, that's what you want to see happen. That's how it should happen. All of that stuff, again, this is more about the paper guys trying to convince you, because let me point out this one time, right, where silver did this and then you lost money, right? They always love to do that. Of course, if you pick out a different time, then they get mad. Well, I don't like that time. Well, why not? Well, because gold and silver outperform stock. Well, I don't want to hear that. I don't want to use that time. You should always be putting it away. But now, listen, we've had some practice now, haven't we? Right? We've had some practice now. Because a lot of us, hey, well, I wasn't around. I was a little kid in the 70s. I had no idea. I didn't know what gold was. Didn't know. Didn't see it. A lot of us grew up in what I'll call the cable TV era, where they just told you, oh my, buy stocks, buy stocks, buy stocks, buy stocks, buy that. Now they used to always say buy houses, buy. Now they're like, well, you can't afford a house, right? Sorry, you can't afford one, but buy stocks. Even though you can't afford a house, buy stocks. We learned a little bit after the dot-com bubble, didn't we? We learned a little bit. Remember, that was the first time they brought rates down to 1%, remember? Yeah. And then, of course, what happened? Well, here comes the housing bubble, right? Followed by the financial crisis, and we learned a lot more then. And to Jason's point, they printed tens of trillions of dollars. Didn't tell anybody. Matter of fact, went to the Supreme Court to block Freedom of Information Act requests so they didn't have to tell anybody how much money they really spent until 2022 is when we learn of all that they did. And guess what? This next pop is going to be even worse. Why? Because, well, look, there's even more debt. It's simple. Be back right after this. 800-951-0592. Patriot Radio News Hour. Joe and Jason here on this Monday. The best deal on the table today, $20 gold pieces. We're going to do it. Think about it. What's up another $10, $12? Don't care. $20 gold. 1 through 9, $25.95. I mean, spot is almost $24.30, $24.25. Spot gold. You got to buy a $20 gold piece at $2,595. 10 or more, $2,085. $2,408, or I'll get it right, $2,585. 20 or more, $2,575. Did I do that right? I get confused sometimes. Now I'm going to make it a little easier. You only got to buy 20 today to get the $2,575. So 1 through 9, $2,595. 10 or more, $2,585. 20 or more, $2,575. I mean, that's not even $150 over the spot price right now, Jason. I mean, that's you're just talking single-digit markups. That's what we do. Put more of it away. If you can do it, do it. Because this is a situation where really what we're talking about is the catching up of gold and silver, because again, they want to believe, the paper markets want to believe that they can fix it, right? So when Jason was talking about silver, that was all paper. Paper. Notice how it isn't paper this time. Matter of fact, it's kind of funny to watch some of these idiots on the TV scratching their head about, oh, well, I don't know, the ETFs really haven't gotten into it in this and that, because you know why? It's the paper that's the problem, right, Jason? Because, again, this is a debt money system. How can they fix it the next time? Already, we're choking on it, aren't we? We're seeing the world choke on the amount of paper that's out there every day. I mean, even on like Drudge now, they've got big headlines about, everyone's getting concerned about the size of the national debt. I mean, it's right there in front of you. It truly is amazing how many people really don't do anything until after the things happen, right? That's always the frustrating part, because somehow they can walk past all the warning signs. I mean, if your kid was going through something and you had all these warnings, you're going to react. Right? You don't wait till the kid ODs or kills themselves, right? You get them, you react to the warning signs. And right now they've done such a good job of hypnotizing, right? Like I said, the cable era. And they come out and they try to come up with these super complicated reasons of why it's going to be okay and why it's different this time, and we don't need to follow really good economic principle. You should know right then, when they don't want good economic principles, Jason, that's the sign that tells you, hey, we're having a problem. And the more quote-unquote tools that they use, the bigger the problem, Jason.
That's right. And the other reason they want you hypnotized is there's only so many ounces of gold to buy physically, isn't there, Joe? If things are moving in a certain direction, we're moving back towards you need to own assets. And the funny money is not quite going to do it. If things are a little shaky, getting a little weak over there, then they don't really want the average guy buying gold and silver or buying these physical things, right, Joe? They don't want you buying a house. We'll make it too expensive for you to buy a house. They don't want you to have gold. They'll make it too expensive for you to buy gold. Like Joe said, you got to get this. And if you're looking at gold approaching $2,500, you're like, it's just too late for me. Well, I don't know everyone's physical situation financially, but you can get ounces of silver pretty cheap. You can get this thing started and moving. nobody knows how bad it really can get. Some of these prognosticators, Joe, and I don't join them completely, but I see what they're talking about. I actually see the path they're talking about when they say, hey, I see silver at $1,000. Well, suddenly $35 or $40 an ounce silver doesn't seem so expensive if we're heading into something that's very severe. Joe, I don't know exactly how it's going to go, but I know one thing. Gold and silver is going to have a value that's always going to keep you whole pretty much forever. At least it goes way back before us, Joe. It goes way back before America. It's there, and it's unfortunately for the bankers, it's the one trick they can't cure that problem. That's something they can't control, Joe.
2 more states have now abolished income tax on gold and silver, Alabama and Nebraska. The latest. I mean, you're just seeing this symphony of people starting to wake up and realize, okay, we need to make sure that the people can take advantage and really benefit from being diversified. I mean, we're watching the entire world diversify away from dollars. I mean, China and Russia just had another big meeting. I don't know if people, we really didn't talk about it last week. Huge what they've agreed to do. Essentially tying themselves together now in every aspect. And the biggest commitment that they made was we're going to continue to dump dollars. We are not going to do business in dollars. Russia's already pretty much got rid of almost every dollar that they have, but they just reaffirmed we're not going to trade anything in dollars. China says, hey, we're right on board. We're dumping as many treasuries as possible, and it just seems like it is unrelenting. And like I said, it's still May. The debt situation starts to get really bad again starting in June, and it's going to last again for the whole rest of the year, for the next, I don't even know, 20 years, 30 years, how long? Well, the dollar doesn't have that long. We know that. 800-951-0592. 800-951-0592. It is literally a battle to put away things that are real right now. People don't want to hold debt. The dollar's a debt instrument. They don't want to hold it. $20 gold pieces today, 1 through 9, $25.95. 10 or more, $25.85. 20 or more, $25.75. You got gold up, back up $12 to get here today. Gold's $24.30. It's just a great opportunity. Silver's up $1. I mean, over $32 right now.
Record high gold every day.
Record, followed by a record. Copper. Now they're talking about copper going up another 50% from here. It's incredible. And all of these things, what do all these metals have in common? Too much demand, not enough supply. Too much demand, not enough supply. Too much demand, not enough supply. What's the problem with paper? What's the problem with the dollar? Too much supply, not enough demand. Too much supply, not enough demand. This is simple. This isn't complicated. This is easy to see. And you know I'm right. Everyone out there listening, you know that this is what you need to do. 800-951-0592. Continue to put it away. Like I said, this isn't the big move. It's hard, right? I get it. It's like, well, gosh, it's up $400. I mean, that's a big move. No. When it's going up $400 a day, then maybe you can say, hey, maybe I better see what happens here.
Yeah, Joe, it's anybody's been listening for a while. When I first came on, I one of the things I did to keep my hands busy and add metals is I actually did copper. I had more interest than I had the amount of money that I wanted to actually put into metal. So copper was easy. My hobby after work would always be to pop open a box of pennies from the bank and take out all the copper ones and pull out about 2 cents worth of copper for every penny that I pulled out. It was, it didn't really earn me a lot. It wasn't really time well spent. As a hobby, it was cool. But I kept some. I sold a lot of that stuff. When I had to move, the couple of times I had to move, you can't be hauling that copper around. I mean, even for me. But if you got a place to put it, sack it away. But I have one of my jars. If you fill a jar has about $10 face value of copper pennies. And then usually what I do is I fill a couple of those and I put it back in the $25 bank box. And I just tape that up and put it in the crawl space that I had. I had a cement crawl space. I had a lot of boxes. I was really, I didn't have a lot else going on besides raising Jack and taking care of the family. But Joe, that $10 jar of pennies right today is just shy of $32. It's over 3 times face value, and that's where silver was in the 60s, wasn't it, Joe? 1.5 times face. By the 70s, it got to 2 or 3 times face. Yep. It took a while, but that's where copper is. We don't sell a lot of copper. Maybe we'll throw some copper rounds on the air here in the next week or so. But you get the silver. If you can't get the gold, get the silver. Get it. And if you can put away a little bit of gold, even that 1/4 ounce to 1/2 ounce, so you can get one of these 20s today. It's time to load it up, right, Joe?
800-951-0592.